our podcast, Keeping It Real.
Most Canadians have actually chosen convenience without realizing they've traded away the control of their actual money. Banks make, financial life feel easy, but that ease often comes at the cost of independence and long-term growth.
I mean, our basic human needs include safety, right? And we associate almost convenience with safety. Like, for instance, if it's easy, then it must be right.
The banks call you up and saying you qualified for a $40,000 bank loan. Right? As soon as people take those opportunities, they now think they have the money. It's not your money, it's a loan.
I think at the end of the day, the banks keep control by making it easy to stay dependent.
Now you have to make the conscious decision. Do I want a small amount of money passively, or do I want a solid return? You set up your investments, you set up your savings account, you set up your checking, you set up everything at the bank. They can literally at this point manage and control your money and your cash flow to their profitability. They have control.
Any captive agent will focus on just selling their product. That's really what they do. They don't actually take into account like a full financial plan. How many bankers do you know talk about the most cost-effective way of decumulation of your RRSPs? Who's heard of the term, don't put all of your eggs in one basket? Welcome to our podcast, Keeping It Real, where we talk about real financial problems with real people and come up with real financial solutions. My name is Irene Meyer.
And my name is Phillipe Villanueva. So Irene, when people are looking for financial strategies, things of that nature, and they go to see someone, right? Do you think most of the time people are looking for the most convenient place to go when they're talking about financial strategies or anything finance? Do you think that that's the case? Is they go to the first convenient place?
100%. Most people actually pick, like this is just from my experience, most people pick their bank out of location. Convenience meaning maybe their parents dealt with them. Or again, like I guess the convenience of seeing them all over the place. That's where they first start their banking relationship, really most of the time. And when you think about, financial advice, they usually think of the bank.
Yeah. And you know what's so true? Even what you just said there about, maybe their parents or somebody that they know is dealing with this institution. So it's just, that's where they go. And most of the time, you're right. They're going to go to where they do their normal banking, right? Because they associate the fact that they do their banking there, that must be a place for financial strategies. But then they don't actually know who's really in charge of the money, like who's actually governing the money. Most Canadians have actually chosen convenience without realizing they've traded away the control of their actual money. And banks make, financial life feel easy, but that ease often comes at the cost of independence and long-term growth, which the people don't realize until it's pointed out to them. And that's unfortunate because it's not even that they're realizing on their own. Most of the time, it has to be pointed out to them by someone like us, right? Or somebody who actually knows finance.
Yeah. I mean, we all love convenience. It's built into everything we do. You tap your card, one-click shopping, using your mobile app. But when it comes to your financial life, convenience can quietly cost you control. And banks sell convenience, right? Advisors actually build control. And today, I think we're going to unpack the real differences. Like, for instance, I mean, our basic human needs include safety, right? And we associate almost convenience with safety. Like, for instance, if it's easy, then it must be right.
Yeah. Very, very true. And the fact that we're already dealing there with our bank account, right? So our money's already there. So we it's kind of given us that sense of safe, right? Because our money's already there. And this is the thing that crushes me. Everyone knows that our money sitting in the bank is not growing or doing anything. You always ask people, how if they've got a bank account, is it growing? And they always say, no, it's like, how much interest are you getting? None, right? So everyone always says that whenever that's kind of a question that's asked. And the answer is always the same. No, it's not growing, or it gets no interest or anything of that nature, right? So why are they still thinking that that's an investment strategy or a place to consider investment strategies if they already know that they're already putting all their money there and it's literally doing nothing already?
And you're right, banks actually capitalize on that mindset, Phil. Like they make it really simple to keep everything, in their house, your paycheck, your credit, the loans you need, the mortgage you need, savings and investments. But, let's face it, like, even if it's easy, simplicity doesn't make a strategy. It doesn't equal a strategy. And, I think at the end of the day, the banks keep control by making it easy to stay dependent.
Yeah, it is kind of it's a really actually interesting illusion, if you will, right? It gives you the illusion that we're a one-stop shop. Come to see us with all your financial needs, right? But here's the thing. We talked about this following the money in last episode, right? What is our money actually doing? The banks are primarily focused on establishing your credit, establishing your ability to present net worth so then you can borrow money. That's their principle. They're lenders by principle, right? And so their primary focus is to be able to lend you more money, because that's how they're going to the more money, the more that they invest for you at a low return and you borrow at a high interest, they're making their money. If they can't do that, that defeats their whole purpose, right? So they need you to think this is the one-stop shop. They'll give you kind of this easy start to invest here idea principle, and it'll be easy. We'll have all these apps, we'll have all these functionalities to be able to, look at your money and do this and do that. But when you really look at the core of why people are investing, right? The people are investing for really eliminate retirement, eliminate all of those things for one reason and one reason only, because they want to increase their passive income. That is the only real reason why anyone's investing, is because you want to increase your passive income, right? So the banks give you that idea that, okay, yeah, you'll be able to do that here, but now you have to make the conscious decision. Do I want a small amount of money passively, or do I want a solid return, a more structured solid return passively, right? And that's the thing that is not being focused or presented. It's all the frills around it that is being presented by the bank, right? Okay, so in saying that, you're getting caught up in all the frills, right? And the convenient app, all these kind of things, or on the app it shows you, okay, now I've got my spending strategy, right? It's not personalized. It's an app that's designed to be generic for everybody, right? And you're starting to feel like, okay, I deal with bank X, and that's where that I've got everything there, so I'm just going to keep going. But nothing is actually focused on you and your own specific personalized financial goal.
No, no. And it's almost that everything that you get eventually with the bank, because they always talk about, the more you have with the bank, maybe the better deals you get. I don't know if that's true still, I'll be honest with you, but every product that you get from the bank increases the bank's control. Think about it, over your financial flow, right? Like, so if they have your saving, they have your paycheck, they have your credit cards and your mortgages and your loans, think about that. They control your assets and your liabilities. They control how much they want to charge you on your liabilities, how long they want you to take it over. I'll give you a really prime example. How many times have you been out there, guys, and you wanted to borrow money, and the bank says, we can approve you for this, and they give you a loan for whatever reason, and you're going to have this loan for 3 to 5 years. Well, let's say 3 years, right? They never tell you really proactively how you can get rid of this faster. Like, just so you know, I did the calculation, and if you just paid like a little bit more, you could actually have this paid off in 2 years. This is just an option for you, but we have it approved for 3 years. Like, they don't talk that way because they're controlling how much interest they want to make off of you. They may not, like, and I'll be honest with you, the banker who you're dealing with may not even realize that. They just think this is how the bank has to do it, and we're going to approve you for this term and the way it's set up, right? But think about you. You're happy that you got the loan. I get it. And maybe it is within your budget. But what if it was within your budget to pay it off faster? You know what I mean? Like, forget the fact that you're not paying as much interest to the bank. You're not going to have this obligation for a year later when you don't have to. And I think that's where the banks need to kind of really be a little bit more valuable, is not just lending the money to the people that they deal with, but and this may be 100% personal to the advisor, but showing them how they can actually pay it off sooner. Now, whether the client does it or not, that's up to them, right? But be valuable when you're doing that.
Yeah, but unfortunately, that person working at the bank is not paid to do that. Right? So they're not going
No,
to they're not
that's
going to
true.
invest their time. They're not going to invest their time because they've got other people to sell to.
That's true.
Right.
That's true. Yeah, you're right. You're right. And the banks would probably be upset at them if they said, "What are you doing? Why are you telling them this?"
Yeah, especially if that branch location is now being hindered by lower profitability because of the fact that they're actually strategizing for their clients. Can you imagine
Yeah.
that?
Yeah.
Because it's not just that advisor at the bank's position that's being governed, but it's each branch is being looked at as a whole, right?
Yeah.
Like any other business, every location is part of a grid, and they're looking at that location and the profitability of that location, whether it's going to stay there or not.
Yeah.
Right. Because
Yeah.
I mean, that's why you see locations closed down, is because the profitability of that location is no longer sustainable to the big picture of that
Yes.
institution. Right.
Yes. They're going to get rid of all the non-profitable branches.
Branches, yeah. So that's why they have to maintain their selling fees, right? So this is where you set up your investments, you set up your savings account, you set up your checking, you set up everything at the bank. They can literally at this point manage and control your money and your cash flow to their profitability. They have control,
Right.
right? So how often have you gotten a notice saying, hey, we can increase your credit limit, or
Right.
the banks call you up and saying you qualified for a $40,000 bank loan. Right? They send you these things, and here's the thing: as soon as people take those opportunities, they now think they have the money.
Yeah.
It's a credit card. It's not your money. It's a loan. It's not your money. All of that has to be paid back with your money at their interest rate.
Yep.
So keep that in mind, people. So, there is a hidden cost to all this convenience, right? So there's going to be missed opportunities. There's going to be higher costs and things of this nature. So, when you're dealing with the bank, let's say you're dealing with Bank X, there is no way Bank X is going to say, well, Bank Z has this option for you, right?
Right.
This other location or this other bank could do this at a lower rate than we can. They're not going to say that. They're just going to
No.
present their product. They're going to show you what you can do with your product, and they're going to focus solely on the limitations of that bank,
Yeah.
right? Or that institution that you're dealing with. I'm not even going to pick on the bank. There are people in our profession that are what they're called captive agents and captive agencies that only deal with their product. So depending on that's kind of the difference between, dealing with a captive or a bank or anything of this nature, as opposed to dealing with an actual broker.
Yeah.
And people, you have to ask the question, are you restricted to only your company's business? Because of the fact that there are people, even in the banks, that claim themselves to be brokers, but they're brokering for their own institution. Okay.
Right.
So
Yeah.
they've titled themselves broker, but they're not actually real brokers as what a broker should be able to do. Okay.
Yeah.
So there are missed opportunities when you're dealing with convenience.
Yeah. I guess in addition to missed opportunities, Phil, I suppose you could translate that to higher costs. Like in-house investment fees. In my experience, there's not a lot of flexibility because that's the bank's investments. You're dealing with that bank's investments, and they may have just a few. Not to mention the fact that, like, the management expense ratio, or as we call them, MER fees, associated with those investments are just kind of like locked in. These are the fees. So if you want to deal with us with our investments, these are the fees, right? Another thing, mortgage renewal rates. I mean, I know we're talking about two ends of the coin, but they're kind of the same, right? Like, so if you're getting investment rates of return here with minus the fees, but you're paying on this side for the mortgage interest rates, like, you can imagine that if I'm paying more on my mortgage rates than my investments are making me, you're actually like eroding your returns with that bank.
Oh, that is such a big thing. Like, I mean, that in itself is it's its own podcast, realistically, because that's their whole purpose, right? So they'll set you up, and a lot of times you'll go in. I want to set up an investment portfolio. You're gonna go in, and they'll talk about TFSA. Next thing you know, you don't even know these. You get a piece of paper that says I've got a TFSA now, and so you feel, oh, I've started. I see all these podcasts on YouTube. I see all these videos talking about start an investment portfolio. So I've just done that. I'm great. I'm set now, right? You go home. You don't don't even look at that paper, and boom, 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 right? Then you bump into an investor, a real investor like myself or you, and we say, hey, can you show us what you've done? And we look at it, oh, it's a GIC, right? And it says there the highest rate of return you're going to get over the next 5 years is 2%. Oh, it's a high interest savings account set up as a TFSA, right? So the most you're going to get on this is 1%, right? But where's your mortgage at? Oh, it's at that bank. And what are you paying on your mortgage? Oh, 5.5%. So
Yeah.
technically, you are still paying to the bank, anywhere from 3 to 4% extra.
Yep. Yeah.
Right. Oh, where's your credit cards at? Oh, my credit, it's at that bank. And what's your interest rate on the credit cards? Oh, it's 20%. Oh, okay. So all of this, the bank is technically making all this money. You think you're making some money to try to catch up on it, but you're not, because the bank is literally governing you at low interest rate investments, because that's what their job is to do. That's literally their primary focus. So, the higher cost and how it's easily eroding away at all your returns, your returns aren't even a factor here. Still, your whole idea is still not there, because the banks now see that you're making a little bit of extra money. They're going to hit you with another loan idea, or they're going to increase your credit limit, or they're going to do, because they can see all this happen.
Yeah.
Right.
Yeah.
So, and then the crazy part about it is, you go back to the bank and you say, hey, I just spoke to the advisor. What can we do here? And you have to set up an appointment, which is going to be maybe 2 weeks out. You can't just walk in, right? And you have to go in most of the time, because a lot of times it's hard even to call into the bank, right? A lot of times you have to go in to even set that appointment. Now you're waiting in this 1 hour lineup, right? To talk to the teller to set an appointment for the next 2 weeks.
Yeah.
So all and it's just, you to govern your money, or to actually start, after you realize, hey, I don't actually have a plan here, and start moving money around and doing things of that nature. It's now a project. It's now something. It's not an easy thing to actually do, to start setting up that plan, or start moving money around, or even to move it out of that institution somewhere else, right?
Yeah.
It becomes a process.
Yeah, no, 100%. Like it almost like, if you think about it, the bank reps, and like you had said, any captive agent will focus on just selling their product. That's really what they do. They don't actually take into account like a full financial plan. We've said this many, many times, right? And again, we're picking on the banks, but there are a lot of companies out there that are the same thing, right?
Mm-hmm.
Whether it's
Yeah.
a bank or an insurance company, investment company, right? But if you had, like, for instance, an independent advisor who can actually give you options, they have no problems with being transparent with you. Like I said in that one example of, hey, if you actually added a little bit more to your payment, you could be debt free in this many years instead of this. And then, of course, aligning this with what you want, right? So if you want to be mortgage free by the time you're 65, that's just an example of a personal goal that I don't think anybody's really thought of. They're just kind of hoping it'll happen, because I don't know why they're hoping. If you have an advisor that can actually do that, as well as have, again, the products, quote unquote, to help you with these goals, not attached to one company, but something that will be aligned with you, you now have control. You and your broker, I guess we'll call them brokers, like us, you now together have control to strategize, right? You have choice across the providers. We deal with a client first approach. I could say most brokers, because they are independent, will go with a client first approach, because really at the end of the day, they have nothing to lose. They're not tied to a target with one company. They're doing it for you, the client. They can base their advice on your goals, not quotas, which allows them to actually incorporate holistic planning, right? Not just looking at your investments. We've been talking about investments and mortgages or lending, but actually your insurance needs, tax strategies. Like how many bankers do you know talk about the most cost-effective way of decumulation of your RRSPs? Now, again, we're not tax experts, but we do our own research, because we want to provide that kind of planning with our client. If not, make the proper introductions to those tax experts, because we really want you to understand that your plan is not about, the bank system and how they want you to, live out your financial plan. Your plan is about you. So it needs to follow you and your lead and your goals. So you really actually need to understand with this video, hopefully you do understand how each piece kind of fits together and why it kind of works the way it does. Like control
Right.
means having a plan that
Yeah.
serves you, right? Not a system that serves your bank.
Yeah, you got to be really careful with because it's like convenience versus control is kind of the theme of this podcast, where convenience might feel like control until you
Right.
realize, it's like a car, right? It's like until you realize the steering wheel isn't actually connected to the car, right?
Yeah. Right.
Right. So that's where you have the convenience of having the steering wheel, but you don't actually have the control because it's not connected, right?
Yeah.
So think of it like this: the convenience that people feel when they're, dealing with the institution, it benefits the institution. Where if you have control of the situation, it actually benefits you. So convenience benefits the institution, control benefits you.
Yeah.
So keep that in mind. That's really, really important to understand. Sometimes a hard concept because of the fact that we've been so conditioned to think that we actually have the control of our money and what's going on. But that's through convenience, but that's not actually the case. Don't get caught up in the frills of the frills of the doily per se. Look at the center and actually focus on what's really happening with the primary focus of why you thought about investing in the first place, right? So when you're making that focus, you are making a conscious decision, right? That's you now taking control of your situation. It doesn't have to be complicated. It doesn't have to be busy. It's just, what is your primary focus? Why are you doing this, right? And hey, who knows? And maybe the institution is the best fit for what you're trying to do. It could very well be. I don't know that. But if it's not, because you're looking now, instead of looking at all the frills and the fluff, and you're looking at what that simplistic primary focus is, if it's not, then you need to go somewhere else. And it's funny because you said that, about some advisors, when you're talking about how they're strategizing for you, and you kind of almost bit your tongue. So yeah, you want to look at an independent, I'm going to put some words together here, an independent holistic financial broker. An independent holistic financial broker. Okay, independent meaning they're not tied to anybody, holistic meaning they do it all, and broker, which means they're brokering for other institutions and companies, not just one. Okay, because now you're dealing with someone who can look at everything. Has fees. People, I'm sorry, we live on this earth, everything has a cost to it. Okay, but they can look at those fees and say, okay, where is the return going to be substantial, so then the fees are no longer really a factor, right? And what is best suiting this client's particular situation with these institutions, and where are they best going to be served? Not what is going to best serve the institution, but where is the institution going to best serve that client's need?
Right.
Right. So again, independent, holistic financial broker. That's what you're looking for, people.
Yeah. And I mean, we always talk about these, diversifying, right? Who's heard of the term, don't put all of your eggs in one basket, right? So, coming back to different ways, and again, maybe we're kind of like hitting home now, right now. 3 ways that you can actually regain control of your finances, folks. The first thing is, like I was alluding to, is diversifying your relationships. Okay. Yeah, may sound a little bit daunting, because you feel like you're going to have to go and search and find all these different companies to help you with your goals. But you don't have to do that. Not when you're dealing with a broker, to Phil's point, because the broker already has all these different relationships with these different institutions that they'll be able to source out the best possible solutions for you. So you don't have to do all that. Let a broker deal with that, right? Keep your accounts at the bank. I get that, right? Because I mean, there's really no broker for bank accounts. But that's all they should have. Bank, just one bank account, right? And then go look for other options with everything else through a broker, right? I don't think I've ever asked this question myself, but how is this product compensated? I've had people ask me though, right? They ask me things like, well, when I tell them all the things that I can do, and maybe you're the same way, Phil, you've probably had this question too, but they ask, well, how do you get paid? Like, they understand that I can do all this stuff, but they're not understanding, why are you going to give me this free advice? And I'm like, and it's interesting because I don't think I've ever had anyone ask me that at the bank.
Yeah,
No one's ever asked me, how do you get paid? Right? They just assume, well, the bank's paying you, so this is why you're doing this. That's why it's allowable for a bank employee to just say whatever they want to you, because they're going to get paid for whatever whatever advice they give you, whether it's wrong or right, right? But when I tell a client all the value that I can provide to them, they're usually wondering how do you get paid? Because of course they don't want to pay me, right? A substantial amount of money to give them advice. I get that, right? They want to know how much I cost, but they also want to understand, like, well, why are you going to do all of this for me? Because like, if you don't charge me for this, which I don't, by the way, then how do you get paid? Which I feel
Yeah.
is, I guess, a very interesting question. Ask those questions. That's fine to ask those questions, right? You can assume that I have a salary, but I don't as an independent broker. And I mean, asking the question, is there a better version out there?
Yeah. You
And
know what?
then,
And yeah, in saying that too, Irene, realistically, that is a legal responsibility of any independent broker is we have to disclose how we get compensated. So
yeah,
we have to disclose that. So I get that question if I miss saying it, but I often let people know right from the beginning how I get. I'm not scared of of that disclosure. And
right.
people in this next coming year, even the fees on our investment portfolios, these management the management fees that Irene had talked about earlier, that is going to be something that needs to be legally disclosed too now, coming in the 2026 year by us independents. So they're making our industry extremely transparent, but the banks don't have that same regulation to be transparent like that, right? So, you know, like in the end, when we're done with you talking to you as an independent holistic financial broker, you know what you did. You'll walk away knowing what you did, right? But you know how Irina said that, you know, people ask us how we're paid. So let me ask you, the client, what did you just do at the bank?
Mm.
You've walked out the door. Let me ask you, what did you just do?
Yeah.
And let me ask you, so you set up a TFSA. Oh, what did you set it up in? And
Oh, yeah.
if you can't answer that question for me, that means you didn't make the decision.
Right.
You
Yep.
didn't make the choices. You didn't make the decision. Someone else did it for you, and it's the institution that made it for you. So keep in mind, people, convenience might make life easier, but it's the control that makes wealth possible. Right? The more you understand your money, the more power you have to direct it. Banks sell convenience for sure. Independent holistic financial brokers build control, and the choice is always yours.
And I think that's a great way to end this segment. We can't wait to see you in the next video. See you soon.
Take care, everyone.